I don't know what we're talking about.
Yes, you do.
Whiskey.
Whiskey.
What
All
are
I
you
really
drinking?
care about.
Welcome to
Uh,
Drams from Dividends, by the way.
I got a little Lefroy quarter cask going.
Nice.
That one's smoky.
Royal Lochnagar.
Oh, you still on the Lochnagar? Wow.
I've got a fresh one here, gentlemen. We should be announcing where we get our drams from. So my drams come from TD Dividends this month. Well, it was actually last month. We're a month behind on that. So
Right.
but I went out and got some Old Granddad.
What is Old Granddad?
What? How do you not know what this is?
It's bourbon.
Never had it. Bourbon.
It's
Oh,
bourbon,
nice.
but it's excellent bourbon to make old fashions with because it is relatively inexpensive for Canada. It's 31 bucks. My old fashioned is, I hope Jordan Mass doesn't watch our shows because Money Master's going to be disappointed this is a fancy cocktail. But another shameless plug is our good friends over at Bar Chef make this stuff. So I don't know if you read that. It's an orange
Bitters, right?
No, it's not bitters.
Oh, it's just
it's aroma.
It's
an aromatic garnish.
Oh,
so because I don't have navel
garnish.
I don't have navel oranges, so spritz, and we'll see how my old fashioned turns out. So
okay.
I think that the point is to get some. I did 3 little spritzes. I've got my old granddad in there.
Nice.
I get the lovely orange nose that you get with an old fashioned.
Right.
Nice.
Because you use the peel of the rind of that to give that nice note. So cheers, boys.
Cheers.
Cheers. So you want to talk about inflation?
Oh, yeah, that's not bad. Yeah, not bad at all. Well, we kind of decide these shows, we never really know exactly what we're going to talk about. And at least I can be prepared for these shows to be unprepared.
That's right.
Prepared to be unprepared. Okay.
Yeah. Lack of preparation is what Drams from Dividends is about.
Is all about.
Absolutely.
That's whiskey in general, isn't
That's
it?
pretty close to what the FI Garage is about. But
it's not.
That's true.
You're not far wrong. But don't you think that there's been chatter for a while since, all the money got printed last year and continue to be printed, that there's a fear of inflation.
Yeah. I don't think it's a fear. I think it's happening.
It's going to happen.
Not it's going to happen. It has happened.
How?
Food
is higher than it was considerably at this time last year. Gas prices are on the way up. Insurance costs are through the roof. Have you tried to get insurance for stuff these days?
No.
Insurance is for a tax for people that are bad at math.
That is not true.
What kind of insurance are you buying?
So I'm talking like any professional liability insurance, house insurance, anything like that has gone up.
Okay.
I mean, that has a lot to do with interest rates being so low and them not being able to get good earnings on the money they're holding.
Premiums.
Yeah.
For sure.
Would that be counted in the consumer price index?
That's the problem with inflation is so many things that we see of real life inflation that hits us isn't in the consumer price index. So the consumer price index could say, hey, inflation was 2% last year. Oh, really? Well, house prices were up, 30, 35%? Mm-hmm. That's not inflation.
Mm-hmm.
That's not you not being able to afford housing. Do you think your groceries were only up 2% last year?
No, I've noticed groceries go up most definitely. Yeah. Well, and that's part of the problem here is, okay, so if you agree or you say that there is already happened or is going to be inflation, then we'll get into maybe how to protect against that in a minute. The flip side of that is maybe a lot of this is just supply chain issues that are happening in some sectors like lumber and things like that right now, that once everything normalizes again, the price of OSB and 2x4s are going to come back down to a realistic level.
Well, here's the thing about prices. They're really sticky on the way down. Right?
Very sticky on the way down.
So an increase for any reason is a good reason to keep prices high for indefinitely.
Yep.
Right.
Yeah. No, that's fair, and it definitely prices people out of doing certain things. If you've got a budget to build a deck, and now you're $1,500 over your budget, you've priced people out of being able to do those things. If that's it, it's unfavorably It's favoring the wealthy unfavorably. Do you know what I mean? It's like, oh, you can
Sure.
afford to do that, then go ahead and do it.
Right.
Well,
It's marginalizing. It's widening the wealth gap, right?
Yeah, and I mean, supply and demand will put some downward pressure on it if the supply increases, but prices are sticky on the way down for sure, a lot stickier than they are on the way up.
You're talking like an economist who still is thinking that we live in a free market economy, which we do not. The government removed the free market economy long ago. So the logistics of supply and demand, while they still factor in, are not the entire puzzle anymore.
No, it's not. It's not the entire puzzle. That's what I'm saying. But I mean, if you're flooded with supply, the price will go down.
Yes.
Yeah. So, well, what about with, money printing? Basically, banks create more money than the governments do when they write loans. So we don't have to go off on that big tangent. But with stimulus, you're spending your way through inflation. The increase to the money supply isn't necessarily in as of itself inflationary. That's the whole crux of what modern monetary theory is, and that's a whole show topic that we don't need to dig deep into. But it's that thought that yes, we can control inflation and we can spend our way through it, or we can stimulus through it.
That's such a short-term outlook on it, though, because we give all these people that need the money money supply. We increase the money supply and long-term create inflation. The true beneficiaries of that increased money supply are the people with assets.
Agreed.
People who are already wealthy. Who are the people? The people that needed the money are paying the services to people who already had the assets in increased rent, increased grocery bills, increased lumber, whatever you want to talk about. So you're increasing the gap. And then there's more of the lower end of the population that are relying more and more on the government. And as you rely more and more on the government, they have to give you more and more handouts and have to print more and more money. And as you rely more and more on the government, they're not relying on you anymore, and they get to start calling the shots. It's supposed to be the government that works for all of us. And if we're all relying on the government for our paycheck, it's us that works for the government. And that is not a position I want this country to get to.
Okay, let's not get too political here. That's your political rant for DFD.
That is my that's for my purposes.
Okay, let's hone this down a little bit. We could talk a lot about how inflation is really impactful on the segment of society that is in the lower income, and also the segment of people that are consumers, that are spending the most amount of money, right? So,
and the paycheck to paycheck people, for sure.
Exactly. Yeah. So that's definitely an issue. But for people that are on their journey to financial independence and have started to amass some assets, how does that group of people that we generally are audiences who we're talking to, how do they prepare for inflation or defend against it?
Or benefit from it?
Well, that's a big part of the fact is you're going to benefit from it.
How's that?
So the price of everything goes up. The price of all your inputs goes up, means companies are going to have to charge more, means profits are going to go up, earnings per share are going to go up. Your share price is based on earnings per share. Long term, your share price is then going to go up. You own housing. There's more money. People are willing to pay more for it. Rents go up. The people who own assets are the people who benefit from inflation.
I mean, is that a benefit or is that just keeping up? It's not clear to me that it's a benefit. I know what you're saying.
It's tough to say. Yeah.
Your nominal income will increase from your assets, but I'm not sure that your real income will increase.
I would beg to differ that your real income will increase.
Okay, I got a couple questions.
We're not smart enough to answer that question.
No, that's why I'm pivoting.
Yeah.
Yeah, that's why I'm continuing on here.
Yeah.
So I have a couple questions from a couple videos that I was watching today to kind of, because I'm definitely not super educated on this topic either, is that for as far as protection goes, agreed that equities are supposed to be a good hedge against inflation. So is real estate. Is it the huge run we've seen on real estate recently? The fact that people are taking on a ton of debt to get into real estate, if we get into a high inflation environment, having that debt is okay because your debt stays the same, but the property goes up, your earnings, your income may go up. So it's interesting. Like, you don't want to advocate for being highly leveraged, but you've leveraged when your dollar's worth this much and you've got 25 years to pay it off type
now,
things.
I think you got to be cautious because you can't assume just because there's price inflation, you're going to get wage inflation.
True.
Right?
True. Yeah.
So I wouldn't jump, like you say, that's not a sales pitch to go 700% leverage, right?
I'm not saying it's a sales pitch, but I'm saying what we've been seeing happening, right? The low interest rates and having debt today at today's dollar value is good if the future dollar value is higher. Or sorry, if the dollar value goes down, your debt stays the same. That debt value is in today's dollars, not in future dollars.
Absolutely. And
right, so
but your other assumption is that house prices are going to keep up with inflation, and we just did an episode coming out about mortgages.
Yeah.
And in that we said, okay, maybe house prices stay flat and inflation brings everything else up instead of a bubble burst, right?
For sure.
That's one option of what.
For sure.
Yeah. So, and the counter to how they try to counteract inflation is rising interest rates. Right. So if you're somebody who's hugely leveraged and we get rising interest rates, the only way people ever go broke is with leverage.
Yeah.
Right. Yeah.
When you are leverage free, you ain't going broke. You might not have very much money, but you're not declaring bankruptcy.
You're not going to zero.
Yeah. Okay. I've got one more to throw in here before we wrap this up, because this could be a whole podcast topic and maybe we need to dig into it. But
we probably do.
What do you guys think about short-term bonds? Not bonds.
I don't.
Not long-term bonds, but like, okay, so in Canada, we've got real return bonds, which are the same as TIPS in the US. And those they pay you a rate plus the rate of inflation.
Yeah.
But their initial rate is trying to price in future inflation. So, but the argument
it's not. The price is a spread. Oh, the price.
The initial
sure.
price. Yeah. But the point is, I'm saying is if you get into an inflationary environment and interest rates are rising and inflation's rising, you're in a really short-term asset that's turning over every 30 days. So you're carrying that trajectory up with those assets when perhaps other asset, and you could use it as a lever to rebalance. I have no thoughts on this. It was just something I came across and read today. Accountant, you're kind of eyeballing it. What are your thoughts?
Oh, I stopped listening when you said bonds.
Okay, I thought so.
Yeah,
I said short-term bonds.
Yeah, but if you're 0% bonds, you can't rebalance, right?
No, I'm not talking about long-term bonds. I'm talking about short-term position if rates are rising.
Yeah, how's that helpful?
Because every 30 days you're getting a higher yield.
Right, but if you keep it in an equity, you get a higher yield because the stock price increases every day.
Why not put it into an adjustable rate preferred share and not have to worry about it every 30 days?
I'm just throwing out options out there, and you didn't give me feedback on my option. You're just giving me other options.
Yeah, because we don't like your option because we don't have any bonds. But if you have bonds and you expect inflation, you should be in shorter term.
Well, that's my point.
Yeah.
My point is, we've talked on the show before about don't have long-term bonds.
Specifically,
but there could be a place for short, and I'm going to say short, I don't mean like 2-year bonds, I mean like 1-month bonds. And there's ETFs that you could use that as your proxy, right?
Yeah. Well, if you lock into a 20-year bond right now at 2%, you're going to get crushed on that over the next 20 years.
Yeah, for sure.
Yeah.
It's a bad idea.
Pennies on your dollar.
Yeah. I think really what boils down to here is, because we could keep going, is that for people that have already begun their journey and started doing some investments, and wherever your assets are placed, like the accountant said earlier, is the benefit is inflation benefits those that hold assets, unfortunately, right?
Or at least it doesn't harm them to the extent it harms.
Doesn't harm them to the extent to somebody else.
Yeah, this inflation harms people that are saving cash.
Yep.
Or are heavily spending and using consumer debt.
Or who are in long-term bonds. Seriously.
Yeah, that's true. Yeah, it's true. Yeah.
So
that pretty much covers that, I think.
So comment below. Is that what we say? Like us, subscribe,
subscribe.
All the good
there
stuff.
You go.
Hit the subscribe button. Comment below. And by the way, in the comments, it's only the economist that answers you. So if you want the mechanic or the accountant to answer you, you need to specify that it's us.
Yeah, absolutely.
Yes, that's true.
Because he's just been speaking on our behalf, and we don't We don't
I have no idea.
check what he's saying.
No.
You know what? For a spritz together, old granddad, old fashioned, that would pass.
Not bad.
I could serve that to you guys, and you wouldn't complain that much.
You got through it in the show. I'm impressed.
I mean, if you're super,
We didn't even have to say
how often do I
tontine.
complain?
Tontine.
Dante, woo! I can finish this one. Hey, it's Thursday, which is Friday in the FI garage, so it's perfect.
There we go.
Friday for me.
See you next time.
All right, boys.
Farewell.